So scarcity creates value.
Yeah.
And it's because there's certainty, right? One of the problems with our money, right, the dollar, is this thing called the Federal Reserve, which I always joke is neither federal nor has any reserves.
Nor reserve,
Right? It's actually not a bank the way we think of a bank. It's actually a private corporation owned mostly by Europeans, which is kind of weird. And what a central bank can do is they can create money out of thin air. Whereas Bitcoin, it has the same scarcity as gold, meaning the amount of new Bitcoin each year that's created is roughly equal to the amount that's lost or stolen. Same with gold. So the scarcity is the same. And that's why scarce assets retain their value. But the divisibility and the portability are better. So I think for the next 5,000 years, Bitcoin becomes. So that's a super, super, super long answer to why do I care about digital assets?
Bitcoin and gold have long been compared due to their perceived scarcity. While gold's scarcity is rooted in its historical rarity and limited supply, Bitcoin's scarcity is predetermined and transparent, making it a unique asset in today's modern era of finance. Mark Yusko, the CEO and Chief Investment Officer of Morgan Creek Capital Management, has expressed a strong preference for Bitcoin as an investment asset. Yusko believes that Bitcoin's scarcity, coupled with its quality as digital gold, makes it an attractive investment and store of value. To him, Bitcoin is a wonderful hedge against economic uncertainty. Yusko acknowledges the gradual collapse of fiat currencies over time. With this, he encourages everyone to diversify their investments into safer assets, such as gold, silver, and of course, Bitcoin. Let us now view clips of Mark Yusko as he shares his latest outlook on Bitcoin's future. Give this video a like to show your support, and subscribe to the channel to stay updated with crypto and finance news. Thanks, and enjoy.
The banking industry has had a monopoly, and they extract $7 trillion a year. Big number. 7 trillion in fees for having accounts and for transactions. Like today, if I want to send you money, right, across state lines, you'd have to have a bank account, I'd have to have a bank account, and they'd charge me a wire fee. Well, with blockchain, I can punch a couple buttons on my keyboard and send you money. And here's the other part of it. And this is the piece that really got me excited about Bitcoin in particular, is there's only one money in the history of the world, really. I mean, there have been multiple attempts, but only one that survived for the last 5,000 years, and that's gold.
Right.
Well, what do I mean by that? Well, money is an asset that exists in the absence of a liability. Everything else that we think of as money are actually currencies. They're backed by debt, government debt. But gold has been money for a very long time, right? Back to Cleopatra's time, to a suit of armor, to a zoot suit in the 20s, to Savile Row today. You take a single ounce and you get exchange for a fine person suit. Because it's been a perfect store of value. And the currencies, the paper currencies, there have been 775 paper currencies in the history of the world, starting in the 1300s in China. 3/4 of them disappeared. They just vanished because governments get so far indebted that the empire eventually crumbles. Bitcoin, it has the same scarcity as gold, meaning the amount of new Bitcoin each year that's created is roughly equal to the amount that's lost or stolen. Same with gold. So the scarcity is the same. And that's why scarce assets retain their value. But the divisibility and the portability are better. So I think for the next 5,000 years, Bitcoin becomes. So that's a super, super, super long answer to why do I care about digital assets? Why am I a late in life venture capital? I say my chapter 1, I work for not-for-profits. Then at my chapter 2, I built a nice little asset management business. And then for the last 5 years, my chapter 3 is I have been a venture capitalist investing in the digital asset ecosystem. And then chapter 4, I'll teach. So scarcity creates value.
Yeah.
And it's because there's certainty, right? One of the problems with our money, right, the dollar, is this thing called the Federal Reserve, which I always joke is neither federal nor has any reserves.
Nor reserve,
Right?
right?
It's actually not a bank the way we think of a bank. It's actually a private corporation owned mostly by Europeans, which is kind of weird. So wealthy European families. And it was created in 1913, modeled after the Bank of England, which was modeled after the Dutch National Bank. It was created by a bunch of European families back in the 1600s. And what a central bank can do is they can create money out of thin air. Well, wait a second. Isn't that bad? Like, think about it. If I have a stack of $1 billion over here, and I create a new stack of freshly minted $1 billion, what just happened to the value of my old stack? Well, it got cut in half.
Before we continue with Mark Yusko's insights, a quick update on another piece of news that might interest you. FTX, a cryptocurrency exchange that faced collapse in November 2022, claims to have more funds than needed to repay its customers. The company anticipates having around $16.3 billion after selling off remaining assets, surpassing its $11 billion debt. Their reorganization plan aims to reimburse most customers fully for their losses. Former CEO Sam Bankman-Fried, convicted of fraud and sentenced to 25 years in prison, led the now-defunct firm. The proposed plan awaits approval from a U.S. bankruptcy court. To gather funds, FTX sold assets held by related businesses such as Alameda Research, controlled by Bankman-Fried. Despite the significant increase in cryptocurrency prices since the collapse, FTX's finances were not substantially impacted. Most digital currencies held by the exchange at the time of collapse are reportedly missing. FTX, once a prominent crypto platform, experienced mass customer withdrawals amid reports of financial trouble, leading to its downfall. This exposed Bankman-Fried's fraudulent activities and resulted in the company's collapse. Now, let's proceed with more of Mark Yusko's insights.
Thomas Jefferson said it best, right? If you ever let a private enterprise control the issue of money, your grandchildren will wake up penniless on the shores of the land that their grandfathers conquered. And it's true, because if you can create something with no effort, at least with gold, you have to mine it. You have to find it. You have to dig for it. You have to mine it. You have to smelt it.
Right.
With Bitcoin, you have to do something called proof of work, right? You have to buy a machine, and you have to tap into the algorithm, and you have to pay for electricity, and you have to produce effort. And this is one of the most genius things. If you think about all of life, big statement, right? All of life.
Right.
It's about converting energy to value, right? You create a podcast. You fuel your body, right? You fuel your mind, and then you produce value through your effort. If we're supporting our church, right? We're giving our time, our talent, our treasure, okay? We're converting energy to value. Mm-hmm. And everything in life is about that. And so things that go against that are antithetical to true value creation. So I always use the example of, actually the best performing asset in the last decade isn't Bitcoin. I mean, Bitcoin's been great. It's better than stocks, better than bonds, better than gold. But the best performing asset is another scarce asset, collectible Porsches.
Really?
Yeah. And the reason is they call it the dentist wrap phenomenon, right? Said dentist, and I shouldn't pick on dentists, but that's what they call it, buys the Porsche, and no one tells them that you should never accelerate when the wheel is turned. There should actually be a string on the bottom of the steering wheel. If you're going straight, hit the gas. If you're going sideways, you can't hit the gas.
Don't hit that gas,
but they turn the wheel, they hit the gas, wrap it around a tree, end of Porsche. So as those Porsches get crashed, the few that survive become collectible. And there are three guys, Jay Leno, Jerry Seinfeld, and John Shirley, the number 3 guy at Microsoft, who will pay whatever it takes to get those collectible rare cars. And so the price of rare Porsches has appreciated more than anything because they're scarce. And, we can think of lots of examples in our lives. Someone's time is scarce. I mean, not to go too far in a downer, but I literally learned this morning that a good friend's tragically lost his father-in-law in a car accident. I mean, just life is precious and time is scarce. And so time is scarce. Relationships are scarce. talent is scarce. There are few people who have real talent to do certain things. Leadership skills. One of the reasons we have a big commitment at Notre Dame to training the leaders of tomorrow is, we think leadership is a very valuable asset. So we try to, identify young leaders and help them with scholarships. So that idea of scarcity is really important. And particularly when we're talking about money and investing, how do we advance anything? Time, talent, and treasure, right? It's
Absolutely.
the concentration of that.
In other news, Bloomberg analyst Mike McGlone reports that more than 95% of investors in spot Bitcoin exchange-traded funds maintained their holdings during recent market downturns. This steadfastness suggests a growing maturity among investors who increasingly view Bitcoin as a stable asset. McGlone also supports a prediction of Bitcoin reaching $150,000. This resilience among ETF investors contrasts with past trends, where significant price changes often triggered rapid sell-offs. Now, investors perceive Bitcoin as a legitimate alternative to traditional assets like gold and stocks. In related news, Grayscale saw a notable 5% increase in pre-market trading on Monday, marking its first day of inflow since January. This influx represents a significant moment for Grayscale Bitcoin Trust, which recently transitioned to an easily tradable ETF. Previously, the trust faced substantial withdrawals, totaling $17.46 billion, largely due to its higher fees compared to other options. Outflows were also linked to bankruptcies in the cryptocurrency industry over the past 2 years, as companies sold assets to repay creditors. With all of that said, considering the evolution of Bitcoin and the cryptocurrency market, what are your predictions for Bitcoin's future value and adoption? Share your insights in the comment section below. If you found some value on today's video, we would appreciate it if you hit that like and subscribe button. Lastly, if you would like to be updated with all of our future updates, please tick that notification bell. Your support encourages us to create more content on the latest relevant news in crypto. Thank you for watching. We hope to see you in our next video.